Hello, and thanks for tuning in to Finance Wise, the show that empowers you to make informed decisions about your money. I'm Dantakostumi Malani, and in today's episode, we'll be discussing the practices of lending, borrowing, and accumulating debt. Many people are currently in a situation where they feel overwhelmed by debt, meaning that they have borrowed more money than they can afford to pay back and do not know how to get themselves out of it. Debt in its simplest form is an obligation to pay another person or institution an amount of money in the future that you have borrowed in the past and probably already used to finance some other expenses. Worse still, some people are quick to lend money to friends, family, and acquaintances that they then find difficult to redeem when they need it most. Today's episode on lending, borrowing, and debt is sponsored by the Financial Literacy Initiative. As you know from our previous episodes, the Financial Literacy Initiative was officially launched in March 2012 in order to improve financial education and consumer protection. The FLI was rolled out in 10 different regions during 2012 and will be further rolled out this year. Now let's see what ordinary Namibians on the streets have to say about lending, borrowing, and debt.
What do you understand by the terms lending and borrowing?
That's unfortunately when you don't have enough money and you have to get money from somebody else, and it comes with charges, finance charges and administration fees. So you have to pay it back eventually.
The terms are very, very dangerous because, if you lend something, people are forgetting to pay it back, so I'm not doing it. For me, it's too unsafe, and no, I don't do it.
Lending, that is when you are giving money out to somebody, and then borrowing, that's when you're actually getting money from somebody.
Lending is when you give people money. Borrowing is when you take money from people to use.
What is debt?
Debt is is when you owe people money, whether it's a bank or a friend or your company.
Debt is more like when you get money from somebody and you're owing them, so you're like a debtor to them.
Do you often engage in lending and borrowing?
Not really, but in this life we are living, once in a while you tend to you tend to borrow some money.
Debt is that sum that you still have to repay. So that's the amount that you borrowed plus the interest and administration fees. And if you don't pay it back, then also added to that is the legal fees.
Do you often engage in lending and borrowing?
Probably more than I should, yes.
What institutions come into your mind when you think of lending and borrowing?
I go back to the first answer, borrowing and lending. Borrowing is family, friends, personal, and lending is institutions like the bank.
Well, the traditional ones are the commercial banks, and fortunately I can see a few developments in some alternative institutions that's coming into the market to give cheaper access to finance.
What are some of the dangers or risks that a person can encounter when lending or borrowing money from either formally or informally?
It becomes a habit at times that you tend to, if you don't have money, you can always say I can rely on getting money from a friend or from the bank, and then it's a bad habit because then you won't be able you cannot manage your finances properly. Those are the dangers.
Although we all often lend and borrow money amongst friends, family, and acquaintances in an informal way, one cannot discuss the practices of lending, borrowing, and accumulating debt in our modern society without understanding the fundamentals of how the banking system operates. This is because banks are often the main players when it comes to formal lending and borrowing in the corporate and retail market. At its very core, a bank borrows money at lower interest rates and then lends it out at higher interest rates. A bank's borrowings are its liabilities, while its lendings are its assets. When you deposit your money into the bank, your money is the bank's liability, but your asset. Therefore, in actuality, an ordinary individual such as you or I can both borrow and lend money to a bank. When you use a bank for saving your money, you're actually lending money to the bank. And when you utilize a bank to obtain a loan to start your business, for example, you are borrowing. Interest is the price of money. When a bank lends someone money, it will usually charge that person interest, meaning the client has to pay the bank back more than the amount that he or she initially borrowed. Lending money is the bank's business model, and interest is the price the client has to pay for getting money from the bank. The next training clip focuses on lending, borrowing, and debt in some more detail. While lending provides a means of investing or saving money by giving it to another individual or organization, borrowing allows people and organizations to do things that they would otherwise not be able or allowed to do. Commonly, people in Namibia borrow in order to purchase houses, cars, and many other things too expensive to buy with cash on hand. For both companies and individuals, having too much debt in proportion to your assets or equity suggests that there is increased risk in investing or lending further to the individual or organization. Too much debt can lead to poor financial performance or even bankruptcy, as the cost of servicing the debt can grow beyond the ability to pay due to either external events such as the loss of income when one loses their job, or internal difficulties such as poor management of personal finances. Payment. Before an individual or institution can borrow or lend, both the debtor and the creditor must agree on the manner in which the debt will be repaid, known as the standard of deferred payment. This payment is usually denominated as a sum of money in units of currency, but can sometimes be denominated in terms of goods or services. Payment can be made in increments over a period of time or all at once at the end of the loan agreement. Customers can compare different loan offers by looking at the interest rate charged over the period of the loan. For example, a 10,000 Namibian dollar loan charging 6% interest over a 12-month period is cheaper than a loan charging 25% over the same period. Types of borrowing or lending. An individual or entrepreneur can use various kinds of borrowing to finance his or her lifestyle or business operations. The various types of debt can generally be categorized into 1. Secured and unsecured debt, 2. Private and public debt, 3. Syndicated and bilateral debt, and 4. Other types of debt that display one or more of the characteristics noted above. Secured and unsecured debt. A debt obligation is considered secured if creditors can lay claim to the assets of an individual or business on a proprietary basis or otherwise ahead of general claims against the business or individual. This is the reason that your bank may ask you to pledge property or other assets as collateral before approving your loan. Unsecured debt comprises financial obligations where creditors do not have a claim on the assets of the borrower to satisfy their claims. Private debt. Private debt comprises bank loan type obligations. Public debt. Public debt is a general definition covering all financial instruments that are freely tradable on a public exchange or over the counter with few, if any, restrictions. Basic loan. A basic loan or term loan is the simplest form of debt. It consists of an agreement to lend a fixed amount of money, called the principal sum, for a fixed period of time, with this amount to be repaid by a certain date. In commercial loans, interest, calculated as a percentage of the principal sum per year, will always have to be paid by the date, or may be paid periodically in the interval, such as annually or monthly. Syndicated loans. A syndicated loan is a loan that is granted to companies that wish to borrow more money than any single lender is prepared to risk in a single loan, usually many millions of dollars. In such a case, a syndicate of banks can each agree to put forward a portion of the principal sum. Loan syndication is a risk management tool that allows the lead banks underwriting the debt to reduce their risk and free up lending capacity. What is a credit rating? When you use credit, you are borrowing money that you promise to pay back within a specified period of time. A credit score or rating is a statistical method to determine the likelihood of an individual paying back the money he or she has borrowed. This is why when borrowing money from a bank or applying for an account at a furniture retailer, they will usually inform you that they need to run a credit check before approving your loan or account. Some of the factors used to calculate an individual's credit score are his or her credit payment history, current debts, time, length of credit history, credit type mix, and frequency of applications for new credit. We talked to some local commercial banks to obtain some information and advice about lending, borrowing, and debt.
My name is Marie Steenekamp. I'm the area manager for the Windhoek Central Cluster at FNB.
What is a commercial or private bank?
A commercial bank is a financial institution that provides financial solutions to clients. The bank will take investors' money and borrow it out to clients that needs financing. Commercial banks are usually regulated by the central banks in that specific country. In Namibia, we are regulated by Bank of Namibia and Namfisa.
What type of lending and borrowing do commercial banks undertake in the Namibian market?
Okay, mainly I would say overdrafts. Overdrafts is usually utilized for short-term financing or for crisis, and it's repayable. Overdrafts are usually renewable every once a year. Then also loans, personal loans for clients, which is repayable over a fixed period of time. Student loans. Student loans are available to students that's registered at a university, and they usually get the financing while they study, and then it's only repayable once they finish their studies. Business financing. Business financing will depend on the requirements by the client, by the customer. What we usually do is that the business case is assessed and then the products are explained to the customer or assigned the correct products that will take their business forward. Home loans. Home loans is for any person that requires to acquire property. We usually also take the house then as collateral for the loan over the period that the loan is granted. Vehicle and asset financing, that's utilized for people to acquire motor vehicles or any assets that's got a serial number. That's also repayable over a certain period of time, usually a maximum of 60 months. Then we also have a SME section where young entrepreneurs that needs to put up a business with a strong business case and doesn't have the collateral to support the application, they will usually be assisted by a SME, small and medium enterprise section.
Why do banks and other lending institutions utilize credit ratings or credit checks?
Credit ratings is required by the institution to assess the risk of losing money. Credit checks are done at the credit bureau. Now, all these institutions share information on the credit bureau, positive as well as negative, and it also displays the client's willingness to repay his monthly debt. In other words, if you've skipped a payment at one of the retailers, it will reflect negative on the credit check.
How does the interest rate influence a loan?
Okay, the higher the interest rate, the higher the monthly repayment will be on the loan. Interest rates are usually established by the risk that's attached to the lending. In other words, if the loan's repayable over a longer period, that will pose a higher risk to the bank. If a client comes to the bank and has had a history of unwillingness to repay, in other words, the credit checks were a little negative, then that will also result into a higher interest rate, which will then result into a higher repayment monthly.
If you feel your debt situation is becoming unmanageable, there are several solutions that you can look into via the services offered by certain organizations. We talked to some of these institutions to gain more clarity on how an individual might manage their debt situation.
Alright, my name is Reginald van Rooy. I'm the Internal Audit Manager at KPMG Advisory Services. However, I specialize in providing risk management services and board assessment services to some of our clients.
What is debt?
Typically, debt is something that is owed or due, and that is symbolized by money. There are different variations of debt. You get what is called good debt. In other words, that's the person who has proven himself to be responsible in repaying the money that is borrowed in a reasonable period of time. And you'll find that financial institutions will be more likely or inclined to borrow that person money because of his good track record or his credit history. You also find what is bad debt, and that is typically what the discussion is probably going to be about. Bad debt is signified by a person's lack of intent or ability to repay money which is borrowed. And there are various reasons why people go into debt. It might be because they are overspending, or it might be because they've become redundant at their place of work. They've experienced pay freezes. In other words, there's been no increment in their salaries, but the cost of living has increased. People also go into debt because their relationships come to an end and they find themselves in an uncomfortable position where they need to service debt. So it's not necessarily that people that are indebted are irresponsible. There's a variety of factors that can contribute to that. I just would like to add to the fact that a person that doesn't have debt might also find the going tough, because banking institutions or financial institutions are less inclined to lend money to such a person because there's no proven track record in terms of servicing your credit.
How do debt problems affect people and businesses?
Debt is an important part of a person's life, and people go into debt because they need to acquire funds for their basic needs. However, this may result in people experiencing health problems. In other words, they have nervous breakdowns because they're constantly worrying about debt. They suffer at the job because they can't concentrate on a daily basis because they're constantly thinking about where are they going to get the finances. And also on a personal level, it leads to the situation where people are not likely to disclose that fact to their partners, and simply because they are embarrassed about the situation.
What services are available to assist people or SMEs struggling with debt in Namibia?
Generally speaking, most of the financial institutions and some private NGOs do offer what is called an SME mentoring program. Now, what the program usually entails is that they'll teach the entrepreneur how to keep a set of accounting records, how to do cash flow projections, how to do costing for their products, so the list goes on. So my advice to the viewers would definitely be to first seek help from those institutions that are strongly geared towards seeing your business succeed. And you'll find, if you do some research, that there are a number of those institutions available.
What would you advise our viewers in terms of managing personal debt?
In terms of managing personal debt, if I can talk on the business side, I would definitely encourage businesses to do an industry and business analysis. In other words, how much debt can my business take on compared to the industry norm? In other words, what we're referring to here is a debt equity ratio, and that will tell you the percentage of debt that you can take on should circumstances change. I'd like to caution our viewers not necessarily to take on debt just because your bank manager says you qualify. You must do that industry analysis and that business analysis. And also, the reason why I'm cautioning them is because of the fact that when banks look at your finances, or financial institutions look at your finances, they are more concerned about the collateral that you offer to service that debt rather than to see your business succeed. However, that is a general statement. I do know that there are financial institutions that do provide these mentorship programs. On the side of the individual, and I guess if you look at the business as well, I'd encourage our viewers to do proper budgeting. In other words, what a budget does, it allows you to prioritize your expenses in terms of your basic needs. So I'll suggest that you'll start there. Your shelter, in other words, your accommodation, your food, your clothing. Rank them, and then secondly, if you're a business, keep a separate list for your personal expenses and your business expenses. Next, I'll encourage you to allocate the amount that you're going to spend on those items. Allocate it to those items and compare it to your earnings that you know you'll be receiving. This can then be done on a weekly, monthly, or an annual basis. And if you're a business, I'll encourage you also to keep a proper set of accounting records, just to detail what you're spending your money on and where you can potentially save some money. So the long and the short is that if you prepare a budget, it's a plan and you must stick to it, and it's going to cause some uncomfortable events to arise because you're not used to it maybe. So there's going to be a lifestyle adjustment, but the benefit of a budget is that it encourages you to stick to your plan. In the end, you'll have finances available to spend on the things that you definitely need, and if you're lucky, you'll see that you've got some funds available to save for a rainy day.
Now that you have some first-hand information, you can get started on analyzing and improving the lending and borrowing situation for yourself and your business. Remember that there is no time like the present to start improving your financial prospects for your future. We have mentioned earlier that this episode is supported by the National Financial Literacy Initiative. The FLI has developed several street theaters which give tips on saving, budgeting, and spending in a very entertaining but still educating way. For additional information on the initiative, you can fetch one of these FLI booklets or posters at the Ministry of Finance in Windhoek, or download the FLI booklet on the website below. Remember that the points made in this program are not meant to give you personal advice. There is no one-size-fits-all approach to managing your finances. The point of this program is to give you a more tangible look at how a business person or individual might implement the ideas discussed. There are many other alternatives out there, and we strongly encourage you to explore them and see what works best for you. Whatever you do, keep the principles we've discussed in mind and never stop trying to learn more. This is Dantakostimi Milani encouraging you to get finance wise. See you next time.